right. Testing, testing. 1, 2, 3. All right, let's do this. All right. Here's what I want to do today. Kind of just going to go wherever my mind takes me, but I've kind of organized what lab activities we want to do and broken out kind of some workshop activities and then some exhibit activities. So this OpenStax thing that I was looking at yesterday is pretty cool. Let me go over to that. I've got this textbook. It's this open source textbook that I can go through as a student. So I could make, some laboratory sessions just going through and saying, okay, let's go through and think about, these things and can highlight. So, I can go through this curriculum and build out my own kind of, as I'm learning with intention to teach, I can be thinking, okay, I need to be preparing my own course artifacts. So as we kind of had looked at before, I'll pull up this. So I've got this course I'm building and thinking, okay, what are the vocabulary words? How do I want to present it? So as I'm going through the course here, I can be building out my own way of teaching it. So that is what I want to do by, go through an actual course in the lab, build out my outline, All right, so like I had here, I could do this. So building out my outline, my presentation, doing that while studying this. So that's what this means. Go through the course, build out artifacts. And then there's building out the graphics that I want to use to be able to teach with. So, for example, if I wanted to, I'm jumping ahead here, but you can see, here's an example of a matrix that I made recently, thinking through how to show realization and accruals and deferrals. Obviously, this is a little bit more down the road, but creating stuff like this is what I mean by building out graphic templates. And also, as I show in my outline, these pictures here, these graphics, these are things that I want to build into graphics that we use. So for example, here's a rough version of one where you say, okay, this represents a balance sheet and the claims on assets. if I give you, a list of transactions, can you identify where something is represented? So, for example, the owner putting in cash, you're going to show there's assets, and then you're going to show the owner having claim to something. So this is an example of the graphics. So several graphics I want to build out to be able to use as places to do exercises. Then I realized that we need to build out an example company. So we need to, we'll come up with a name and come up with a list of things that happen throughout a year or multiple years, and then use the things that we're learning and use the activities and translate them into accounting language. So, for example, let me use one of my cool new things real quick. All right, so I'm using a whiteboard right here to say, all right, if we can have, a company, and this, let's just say it's in natural terms. No, I don't want to be bothered. Natural language. So if we can come up with, a whole bunch of natural language, a list of things, let's just say a list of transactions. The whole point of accounting is to represent the story, go through a translation. Jeez, why is it doing that? So, translate, I can't spell. Let's call this the books, and financial statements. So go from natural language, translate it into accounting language. So as we, learning accounting is learning how to translate it. Well, we're going to start with simple vocab and grammar. So let's just say level 1 all the way to, let's call it level 3. We need to have a list of things that happen that we translate using simple grammar, and then translate using more complex grammar, and then more complex grammar, all the way up to kind of a fluency. If we know how to translate, then we'll also know how to read other, the whole point of this is to get to a place where we can understand. I need to make sure I'm not covering up the, whoop. Don't ask me again. All right. So that's why we need to build out an example company. All right, there we go. All right. Then we also need to build out, based on this example company, build out a whole bunch of questions, exercises, and problems so that people can test themselves, validate and confirm understanding. The other thing I want to get going is workshop. So I spent some time figuring out how to get Discord going. I can do laboratory workshop sessions where I can be streaming, practicing workshopping stuff and tutoring. And then I need to do my exhibit activities of creating actual kind of well-produced content that is ready for showtime. I think immediately I want to start producing some shorts with like easy question and answers. All right. So step one. Let's look at this Course 101 outline, and let's build some level 1 artifacts. So I think maybe it starts with just this simple balance sheet. So I think what I want to do is have these as PDFs. So I'm going to build it in Illustrator. So I'm going to take this over here. I mean, that might honestly be good enough for now to be able to say, well, let's just start with that. So I'll save that. What other graphics do we want? So that's an example of using it. Seems like this is a pretty good graphic. Sure. Well, no, I'm not coming back to that. Okay, I'm gonna save this. I gotta figure out how to get this into the right environment. So is that... All right. Okay, so let's practice this. If we... We need to have a list of examples, like an example company. So, example co. So let's say example co activity. So as we go through, so let's just make up a simple story. The owner starts a company. The owner contributes $100 into the company bank account. And then, so at that point, the company buys a lawnmower for $50. And then company buys, and this is all, let's say, in month 1. Company buys $20 in fuel. Ooh. And then, let's say month 2, company mows a lawn. They get paid $20. They use half of the fuel. And then let's say in month 3, same thing happens. And then also owner withdraws $10 from company bank account. Wonder if we need to the music's kind of loud in my ear. I'm wondering how strong it is on the stream. Okay. Owner withdraws $10. I want to do something in here to help illustrate kind of realized gains and unrealized gains. So it's simple to identify that, you know, getting paid $20 is a realization of gain. So I want to add something. Let's say we might change this, but owner realizes that the lawnmower the company bought is a collector's item and is listed on eBay by another seller for $200. Okay, so let's start with this. So over here, we've got this graphic, and we want to translate this story into this graphic. I'm going to get these side by side. All right, is this going to work? All right, so in month 1, the owner starts a company. So what's important there is that identifies stakeholder as owner. Is this going to let me draw? How do I make it so that the background is not black like that? Boom. Cool. So owner starts a company. It's a different stakeholder. The company and the owner are different stakeholders. One different color. All right. So you got the owner and the company. These are two different things. It's my little picture of a building. All right, so this whole drawing over here is the business. Like this graphic is how we're going to illustrate the business separate from the owner. So now let's go through the story. So the owner contributes $100 into the company. So we know the company now has $100 in its custody. And if that $100, if this company was going to liquidate and be distributed out to the stakeholders, it would go to the owner. Another way to think of that is, where did this 100 come from? How do we reflect the changes on the right side of this line? So that's going to be right here. So saying, okay, we have assets of 100 and there's claims by the owner of 100. So then the company buys a lawnmower for $50. So after that happens, what assets exist? So we've got cash over here, but then now we've got another asset, which is the mower, which is $50. Well, do we have $100 of cash and $50 a mower? No. We have to reduce our cash by 50 to show that there's a reduction in cash. So it's almost like you could think of it as cash was traded for a mower. So I'm going to number these. Number 1 was this thing. Then number 2 was those things happening. So then the company buys $20 in fuel. Well, we have $20 of cash decrease, and we've got fuel of $20. So if we wanted to say, okay, what assets did this business have at the end of month 1? They've got $30 in cash, $50 worth of a lawnmower, and $20 in fuel. That all adds up to 100. Over here on the right side of this box, we show who has claim to these assets. Well, there's no creditors. There's only an owner. And they have claim to 100 of it. Okay. So this right here is an illustration of we need to have this box. So let me go back. We're building out this graphic and showing how to use it with these example company. Well, this graphic, the goal is to get this graphic to a place where it is good, meaning it can be used to teach these concepts. So already I'm a little worried about it because I'm going to run out of room. But maybe that's fine because this is just a level 1 graphic. So let's identify some things that I want to change in this graphic. I want to call it the level 1 graphic. Should probably add these green boxes like I have it over here. Should probably add some boxes for the different kind of items. Maybe. I don't know. That's questionable actually, because in my outline, let's come look at my outline. I think my whole point was to say we're trying to illustrate the rules of the game. It's all about translating thing into this box, and the important things on this box are the asset, liability, equity. And I think what we're really trying to do here is illustrate so we place things into the box how we just did. Maybe this first version of the box, we need to get rid of these boxes and just show it as one big box. So actually, let's get rid of the green. We're going to get rid of all of this and just show Just a sec. Pull an audible here. We're just going to redraw this thing how it should be. So, give me my keyboard back. No. What's important here is we're illustrating assets, liabilities, and equity. The important thing we're trying to illustrate here is it's showing these three things. And then the idea of translating. So we're just identifying the three components and then the idea of translating them. So it's important to say, okay, we've got different stakeholders. The owner. How should we draw a bank? I'm trying to make it just kind of, whatever. You've got the creditor, and then you've got the business. We need to think of some reoccurring graphics that we use. So you got these stakeholders and the business, and you're saying, all right, whatever value, whether it's whatever's here. So I think the examples we should be using here are not that complex. So let's say level 1 examples. Let's call these kind of level 2. Level 1 is a company has $100 from the owner. A company has $50 from the bank. A company earned $50 from operations. So maybe that's as complex as we want to get with that, is saying, hey, the company has $200. Who has claim to it? Well, the bank is owed $50, and the owner gets everything else. So, I think that's as far as level 1 needs to go. Is being able to just recognize what's really important here. What's really important here is 1, the idea of this center line. and then the idea of the two stakeholders. So, and then assets, liabilities, and equity, stakeholders, and then claims. So we've got these examples here. How do I want to couch these? So starting a formation of a company. Do I want to start introducing? Okay, let's just call it formation. Formation of a company. Operation of a company. Man. Formation. Operations. And then it's called building. Building or building. Planting, building, developing. Got to figure out a way to say this, but the whole point is investing in capability to create value. So this is where company a company buys equipment that it will use to generate income. All right. So all we need to be able to translate kind of those level 1 explanations are this graphic. Assets, liabilities, equity. We need to call out, let's call it creditor. And then let's introduce a box that's kind of like a calendar. We'll break it into sections. So basically showing illustrating Is this overcomplicating it? We want to just show like in this period and then a running total. Okay, I kind of feel like I need to workshop this. I need to bounce it off people to see. I mean, I need to do a trial run. All right, I think that's what has to happen. Let me phone a friend. Do I need to make a quick version of it real quick? Okay, we're gonna jump over here. Let's build this real quick. Quick and dirty version. All right, let's try that. All right, I gotta figure out how to get this into that environment. Hold on. Hey, can you hear me? All right, just a sec. Let me see. Say something. I want to see if I can get your voice into the stream. Okay, hold on. I'm gonna unmute you. Be careful. Don't say anything bad.
Okay.
All right, you're in. All right, I'm getting a graphic to be able to show you real quick. So hold on. All right. There's parts of this. I'm not. Hold on. All right. Can you see my screen?
Mm-hmm.
Okay. So I'm gonna quiz you on how to tell a story using this graphic. I don't know if I've taught you this graphic very much, but I'll do a quick overview with you real quick. So, assets, liabilities, equity. Hold up. I'm gonna follow my script. So, I'm teaching you the grammar and vocabulary of how the accounting language works. So step one is understanding assets and liabilities and equity. I'm gonna totally back up and just do my slide deck on you real quick. All right, let me get rid of my picture. All right, you see the slide?
Yeah.
All right. It's gonna let me go backwards. All right. So, accounting is actually just telling the story of a business. First of all, do you have 10 minutes?
Yes.
Okay. So, accounting is telling the story of a business. And the story that it's telling is I want to be able to use my hands. Hold on. No, I'm not going to be able to. Okay. So what this okay, time out. I don't like doing it this way. I want to be able to draw. So hold on. I'm changing how I'm doing this. First of all, I think this music's too loud. All right, try this one. All right. All right, so accounting is a story telling the story of a business. And it's really telling you, the way it tells you the story of business is it's telling you where the business is in terms of its asset value over time. And it's telling you the position of a company between points. So let's say it's like right now, you are here. So it's saying, hey, I'm telling you a story and I'm going to tell you my current position. So position being the important term. Here's my current position. And here's my position where it was before. And then here is the change that has happened. So you could say, hey, the distance that this has traveled in that period of time is how much it's changed over that period of time. Does that make sense?
Yeah.
All right. So one of the things accounting does is it gives you a statement of position. Then the other thing it does is, all right. Well, okay. Let's pause there and say, all right, it's giving you a statement of position in terms of your asset value, and your asset value is how much value you own and control as a business. So the definition in a book would be an asset is a resource with economic value owned by the company. So I'm going to make a little note to myself to be able to say, okay, what's not an asset? Or what's a classic example of an asset? So here's the classic examples is cash. So if you have cash in your bank account, that can provide immediate economic value. So, I mean, it has value to you because you can do things with it. Inventory, another classic example, because you can generate, like it has value to you. Property, another example of an asset. Accounts receivable, I'm not going to talk about that right now. All right, things that are not assets are like in your skills, your employees' skills. Those do not. I don't want to get into that. Forget this. So what's not an asset is things you don't own. Don't think so much about what's not an asset. Let's just think about simply what is an asset. Cash, inventory, property. I want to add on to here equipment or machinery. All right. Does that make sense? Do you have any questions?
No, that makes sense so far.
Okay, so those are assets. Well, so I said that the story of a business is about, hey, how many assets do you have right now? Or what's their value right now? And what was it before? And then how there's a change. Well, the change, the word to know here is realized. What's the realized change? And what that means is, like, this concept of realization is really important. So, let me tell you, have you ever heard someone say, like, if you are holding stock or something, and they say you don't lose money if you don't sell? You ever heard anyone say that?
Yes, that's probably the only situation that I've heard is with stocks.
Yeah, I mean, this is like a popular thing you'll hear is, oh, you know, if you don't sell, you don't lose it, or you haven't lost anything until you sell. What that comment is pointing out is that you haven't realized a loss yet. All right, what about if you have an asset, like let's say you have some really valuable Pokemon card and it's worth $1 million. Do you consider yourself a millionaire?
I mean, on paper you would, but you run into the same situation of you haven't realized the gain.
So you're saying the right things, because that's pointing out the principle here is, when do you realize the gains of something? And then the other term is when you recognize it. So recognize is when you like put it in your story, when you write it down. Realize is when you say it's real. Well, I could make the argument you are a millionaire if you have stock worth $1 million.
Mm-hmm.
Even though you haven't sold it yet. Like, you could make an argument that you've realized that value. You know, one way you might like, will a bank lend you money against stock? Or will a bank lend you money against property that's appreciated in value? Yeah, they probably will. So does that mean that you've realized a gain? Like, is the gain real? All right, so we don't have to answer all those questions right now, but I'm trying to get you to think about this concept of realization. Like, when is it real, and when do you recognize it? All right. So just those you need to those are core principles that are in play here, because when we're talking about this picture here, your position is defined by the realized value of your assets. Does that make sense?
Yeah.
Like, if you have a Pokemon card that's worth a whole bunch, maybe that represents value that you have in the company. Maybe your position goes up. Now, realized versus recognized, those are different questions. Because you might have realized it, but you don't recognize it by telling it in the story. Okay. So we'll come back to realization principle, but just I need to kind of get that going in your head. All right. Concept. The next concept is this idea of different stakeholders. So creditors and owners. So when a business has these assets, there's two classifications of stakeholders that have claim to the assets. Meaning, like, one way to define that is, if the business, if it liquidated everything it had, who would get it? And there's an order, like there's a ranking of where assets go. The first place they go is to creditors. Creditors are first in line. Then anything that's left over after creditors get their money go to owners. So owners rank below creditors in this like hierarchy of asset claims. Does that make sense?
Yeah. So what makes someone a creditor versus an owner?
So creditor, they don't well, one way to define it, a creditor is they're first in line, and there is a limit to how much they get. So a creditor, there's an amount that they're owed, and that's all they get. So
Okay.
the way that that's said a lot of times is limited upside. So another thing to say is, like, a creditor has no control of the assets. An owner,
You need something, buddy?
they just a sec, I hear someone in your background. I'm gonna mute you or you muted yourself. All right, so quick pause while I'm waiting for him to come back. I've identified several things that need to improve. So this being a big one, that color.
All right, I'm back.
All right.
So creditors and owners.
A creditor has no control
Okay.
over the assets.
But they get paid first.
They get paid first, so they're first in line. They have limited upside, meaning they only get what they're owed. So you could also say a creditor is owed money. You would never say an owner is owed anything, right?
Right.
Not owed anything. That's kind of what defines an owner, is they're not owed anything, but they get everything that's left over.
Okay.
So the creditor has limited upside, meaning they either lend you money or they do something that makes you owe them money. There's a limit to how much they're owed. So there's limits. They're owed money. They have no control over the assets, and they have much less risk. They have no risk of ownership. They just have risk of being owed money. So does that make sense?
Yeah, so their risk is just they could potentially, like if the business fails, they could just potentially not be paid back.
Correct.
Okay.
So their risk is limited because to what they're owed. But their return is also limited to what they're owed. That's the wrong way to say it. Their risk is whatever they did to be owed. Because, I mean, if you just think about it like a bank, they might lend 100 and they're owed 110 because of interest. Well, their downside is 100. Like, that's how much risk they have. But what they're owed is 110, but that's a max. There's a limit. Like, there's a cap to how much that they're going to get. Later on, we'll start to describe this as a waterfall. But that's a very advanced way of looking at it, where money comes out and it fills up this bucket. And then whatever overflows from there goes to the next bucket. You'll hear it called different tranches. But that's like level 8. All right, so point here is to understand the creditors and owners, two different stakeholders and the characteristics of them. The reason you need to understand them is because when we're telling the story of a business, it's telling you the, oh gosh, how do I make it so my hand doesn't? It's telling you, hey, in this story, we're telling you the position and we're telling you the total change of position between these 2 points in time. And then what we're doing is we're going to tell you how much of that change in position is for the benefit of the owners. And we'll call that the statement of change. So this is the realized and recognized change in equity. Equity being, I should introduce this in this last place, is that owners have equity. So what the owners own is called equity. What the creditors own is called liabilities.
Okay.
There's a lot of background voices. All right, so when we're talking about the story of a business, oh my gosh, you got to tell me if my camera's over the screen, man.
Is another name for statement of change, statement of owner's equity?
No.
Those are two different things.
When you're trying to jump ahead like that, I'll tell you this is the income statement.
Okay.
So, I'm trying to think how to make that clear. So just put a pin in that. I'll help bridge the gap on why you thought that in a second. So this whole story of a business thing is talking about, okay, current position, change in value of assets, and then saying how much of that change is change in equity, so the amount that the owners would get, and then how much of that is a change because of creditors. Does that make sense? Are you following?
Yeah.
So it's two things: statement of position, statement of change. All right, so let's go over these vocab words real quick. An asset is a resource owned by the company. A liability is the expected outflow of resources to creditors. Equity is the expected outflow of resources to owners. And then the whole changes. So let me go to the top here. It's what's all the value of the company's assets, who has claim to that value, and then how has the claim of the owners changed. There's a lot of background voices. Go on mute unless you're going to ask a question.
Okay.
So this recognizes of changes in equity. These are the realizations of changes in economic value for the benefit of the owners. So changes in equity. You could call that the net income. I need to think about your question in terms of, so this is a sidebar to myself right now of, I need to think through if I'm saying something inaccurate, because position can change because of contributions or distributions or investing activity. I need to think how to explain, because the income statement a lot of time is called a statement of change. You said, what about the statement of stockholders' equity? That is like a very specific statement of change just related to the balance sheet that includes net income. So I need to make sure the Venn diagram in my head is not flawed here. So let's just say you got assets, liabilities, equity. You need to know what those are. And then net income is the change that's happening. And you could break that into revenue and expenses. All right. I wanted to... Whoa, crap. I wanted to go over those things because that's the build up to this picture. So I want to introduce this picture, which is a picture of assets, liabilities, and equity. And then I'm going to call out the center line. This is showing, so all the value that exists, and then who has claim to it, right?
Mm-hmm.
So I'm going to tell you a story of a business using natural terms, and you're going to tell me how we reflect it using these vocab words. So if a company gets $100 from the owner, how much asset value do they have?
So cash, which is an asset, would go up by $100.
Okay, so they've got 100 in assets.
Mm-hmm.
And who has claim to it, or where did it come from?
Because it's the owner, it would be equity.
Okay. So that's how you use this graphic to draw that story. Well, now let's say part 2. A company has $50 from the bank. So how much assets do they have?
Yeah, so cash would go up by another $50, but that would be a liability because it would be a creditor.
Yeah. Okay. So then a company earns $50 from operations.
So that would be cash again for another 50. And then you would just have the expenses that came from that operation.
Expenses. I didn't say there was any expenses. So our assets went up by 50. Who has claim to that $50? Is it owed to anybody?
It would be the creditor. The creditor.
The amount that the creditor is owed, you're saying went up by 50?
No, wouldn't.
Who has claim to that $50 that they earned from operations?
Would it be the owner?
Yeah. So
Okay.
equity goes up by 50. So now let's say that the company buys equipment that it's going to use to generate income. Just a second. I got to see where my keyboard's at. Okay. The company buys equipment for $20 that it's going to use to generate income.
Mm-hmm.
What is the value of the assets?
It would stay the same.
Why?
Because you're just trading cash. So you're taking away from the cash asset, but you're adding it to an equipment asset.
Okay. So let's say this is cash and this is equipment. Okay. All right. Let's say you then pay $30 of cash to the creditor.
Okay.
How do you show that?
So you would take away 30 cash from the assets and subtract 30 from the liabilities.
So let's say 30 goes out of that box. 30 comes out of that box because the amount that is owed to the creditor went down, right?
Mm-hmm.
Okay. Then let's say that the owner takes $10 out of the company. The owner takes $10 out of the company bank account.
Mm-hmm. So take 10 from cash and take 10 from owner's equity.
Okay. Cool. I think that's as far as I want to take this right now. If I'm going to jump over to... Oh, crap. My outline. I've just showed... All right. Showed you assets, liabilities, and equity, and then translating things into it. The next going to be expanding out the equity box to handle the different types of equity changes. Okay, do you have any questions? Did any of that not make sense? Did that all make sense?
That'll make sense. What do you do though when you have more than one creditor? How do you decide who to pay first?
Um, so, I guess the way I'd want to answer that is that accounting itself as a language doesn't show that. Like it doesn't, there's no way of designating using accounting grammar and vocab to order what way you have to or will pay creditors. The only thing, let's say, if we were using this box here to show like multiple creditors, let's say here's one creditor, here's another creditor, the way that they're ordered here is based on how soon you expect to pay them. So let's say you have one loan that's due in 1 month. Man, I got to figure out how to be able to write with my palm on this thing. So 1 month versus 1 year. Like things are ordered in accounting grammar. They're ordered based on how soon you expect to pay them or how soon they're due. But that's not necessarily a representation of legal claim. Like in theory, if you had like a mortgage or maybe a line of credit or some kind of, you could have a loan to a bank that contractually has first priority over all other debt that you have. And that's not going to get represented on the books in accounting. So accounting doesn't have a way of showing that built into like the basic, terminology and grammar. Does that make sense?
Yeah.
So things will be listed by just like how soon they're due or how soon you expect to pay, but it's not necessarily tied in with legal reasoning.
Okay.
Any other questions?
I think that's it so far.
Okay. All right. Well, I'm going to let you know when I'm ready to workshop the next steps. But that's good for now.
All right. Perfect.
Okay. Thank you.
You're welcome.
All right. Hopefully that audio came through on the video. I'll have to see after. All right, so we just workshopped this graphic, level 1 graphic. Let's go back to our kind of objectives here. So if I'm going to break these apart, this is going to be kind of the point of this is identify holes in my outline. So this one's going to be my outline itself, and then I'm building out these graphic templates like the one I just used, and then I'm coming up with example transactions to be able to go through and use on the graphic. And then I need to come up with a bunch of just questions and exercises. Maybe I could do a quick version of that real quick of what that looks like for level 1. I mean, I think this is going to be mostly questions about, I mean, let's look at the textbook because it probably has so concept languages or concept questions. Oop. This is all probably intro stuff that we skipped. All right, creditors and lenders. So there should be some questions at the end about this. No, I think that is a fail. Whiteboard. Okay. Yeah. Wasn't even showing you the right thing. Here's what I'm looking at. So looking at the outline, I skipped all of this overview of accounting stuff, which is where a lot of this lines up with a lot of what was just in the textbook. Okay. All right, well, I'm going to stop there for now. Need to take a break, and then I'm going to come back my next session. I think I'm going to spend some time building out that graphic a little better. But I want to get some questions going. And then I think I want to focus back on the overview of accounting stuff with the book. I'm really anxious. Okay, we just did a Discord thing. I'm really anxious I want to produce something even though it's going to be bad. So that will be my next thing is going to be picking a question out of this book, out of the textbook. Maybe all the questions. We'll just go through the chapter. Yeah, I'll do chapter 2 questions. Let's make some shorts for these. Maybe something as simple as, what's the question? I need to do proper citing and then talk through the answer. So maybe like a minute each. So let's write some scripts. So I'll just start this now. Lab session will be write scripts. What's the question? What are the choices? And then talk through the logic of each, and then discuss solution. So this will be the template Q&A short template. So what? So we're going to create 10 scripts for chapter 2 from OpenStax textbook. Okay, so I'm gonna come back. I'm gonna do that, and then let's record at least one and publish it. And that's gonna bring up a whole bunch of questions and problems of like improper, well, I need to definitely do citation, but let's just break the ice here. And that's gonna be a whole bunch of things that I know, issues I know. Is gonna be graphics, thumbnails, just strategy at all. Like it's not gonna be good. But the point here is to just punch something through the ice so that we can start learning from mistakes. And that's what we'll do when we come back. All right, here we go.